Yo guys, how you doing? Good evening from here. And hold on, I have to do something. And okay, we're back. So I really thank you for the 300 subscribers, and I plan to keep dropping content for you guys and give you educational stuff to study. And right here, I really want to give you guys an update. So don't mind me talking about, don't mind what I did here. So I want to give you guys an update on analysis I did for you guys and the setup I gave you guys, and that is on 250 1S. So you guys do remember the analysis I did over here, right here, and we can see how far it is gone, and I'll be waiting to enter the market right here also because I did my setup, stop hands, change the character, breaking market structure. I'm seeing liquidity area, but then price didn't come back, so I had to ignore that. But then I want to show you guys something. First of all, we have seen how far it's gone, and the most surprising thing, guys, it went to where? TP. It went straight to take profit. That is the beauty of swing trading. I always tell everybody, both on Facebook and those on my mentorship, that I do swing trading. I don't scalp, I don't trade, and I am not focused on currency pairs. I am more focused on synthetic indices. And as easy as that, as easy as that, once you're always spend your time with the chart, you can actually predict where the algorithm is trying to reach to, and you can find opportunities where you get execute a trade, and then you target that area in which the algorithm is trying to reach for. Alright? So remember I told you guys that the first thing first is that we do know that we're having a range market. So now what am I to mark? The first thing first is to mark my range highs and low. Now this is where I started marking my range high and low. I marked my low, and then I marked a high right here. So the first thing that I did notice was that price has already taken buy stops resting on that high. So we have buy stop taken out, and buy stop on the range high was taken out. Then we now see the price retrace downwards right here. Then it gave us equals, it gave us liquidity, right? Then it traded backwards again, and it failed to go higher to take out liquidity. So it started to pull downwards, take out sell stops, resting right here. And then we have the hunt on liquidity pool resting right here, sell side liquidity pool resting right here. So now now I get to mark again my range highs and lows. Now what is my range high and low? This is my major high, and my major low is now transferred to this low. So I am trading within this range. Now since I did notice that price has already taken out sell side liquidity pool, where will the algorithm be likely be drawn to? Because you know that smart money concept trading that most smart money traders won't tell you is that we are hunting liquidity, and when we hunt liquidity, when the algorithm takes liquidity, it will be drawn to another liquidity, right? So if it hunted support, its net target will be what? Buy stops. If it hunts sell stop, its net target will be buy stops. Take liquidity and be drawn to another liquidity. That is the number one rule you should know about the algorithm, about smart money concept, about institutional trading. As easy as that. Also imbalances. I've always talked about this all the time. The algorithm prints liquidity and imbalances. It does two things: to print liquidity, to print imbalances. Then it comes back to take out liquidity and also to balance where we have inefficiency. That is simply applied to the study of supply and demand. That supply should be equal to demand. If not, the market will not be balanced. So that is it, by the way, for the economics. And right here, you can predict where the market is going once you understand algorithm, once you understand liquidity concept, which is what we have a range highs and lows. And I noticed that low has been taken out, so it should be targets to draw liquidity to this buy stop resting on this high. And that's where I told you guys that it will be drawn to this buy stop resting on this high. If you can remember, you can go back to watch it, and I talked about this liquidity resting right here. So we can see how far it went. The beauty of swing trading, from this point up till take profit, and we can see how it just spiked that area. I was expecting the market to trade lower again, then I enter at my point of interest where I had a stop hunt and then target that high. But since it didn't come back and just rally that way and hit take profit, I will not be confident enough to see if I could be buying again at this area for the purpose of it being at a premium pricing. Right, it's still expensive and the balance is below. So I'll possibly see if this structure will be broken. Then I'll kindly look to see if I will see a sell entry. And when I see a sell entry, I will target in imbalances and then another sell stop right here. So that is what I've been watching out since it has hit take profit. I am not interested to execute a trade at this area again. As easy as that, premium pricing. So that is it, and I can also go back to explain the analysis that was done here before. So all right, so I go back again. First and first, start the analysis from a higher time frame. Know your bias, where is the algorithm drawn to, and we did notice from a higher time frame it's been bullish. Then I have to wait for my setup to print itself for me to execute my trade. Right, so I did notice it balanced price, the punt, and rallied again. We have imbalance after a structural break, and I did notice it traded lower again to take liquidity and trade into a fair value gap, and we now see an order block printed right here. But then to confirm my order block, I need to see my setup. So I was on the lower time frame and I saw a significant support and resistance. Also, I saw a KMT arrow right there, and then this right here is my breaker block, because this is also a bearish order block, but it wasn't respected, so it is now a breaker block. And where did the price do? Price tapped and it rallied, but before then we have to conduct liquidity assessment. It draws liquidity, a liquidity assessment around our point of interest, in which the price we have to take that liquidity, use that liquidity to activate our orders, and then we get to see and target a draw to liquidity, which is right here. So that is the liquidity assessment. Take liquidity, tap point of interest, and be drawn to liquidity, as easy as that. So price took a fake out zone right here, people thinking this an order block, so it took them out and price came to my point of interest, and I refined too much because I wanted to trade into this Beverly gap, but then it just tapped top of the breaker block and it now rallied away. So I said again, I did not take this trade because I was expected to sell at 50%, to buy at 50%. But then I missed the trade and I didn't want to chase price, so I let it go that way, and that is how it did follow my direction, as easy as that. So first and first, know your bias, know where the algorithm is drawn to. Then you log down to your lower time frame to see if you could possibly get your setup printed on lower time frame, where you can enter your trade and you could possibly swing your trade. As easy as that. And though forget me saying as easy as that, it takes a process step by step. So yeah, that is it. And you should know your market structure. It is very, very important you know about your market structure. Okay, so we hit the target, and there's a lot of money right there that I did miss, but then it's fine. There's always opportunity on the market. It comes whenever it has to come, and when you see the opportunity, you have to seize that opportunity and take it. So just to give you guys an update, nothing much, and later on, till then, stay safe.